My esteemed pleasure to welcome you to the fourth session. Since April 2024, the bank has hosted a number of in-person and virtual lectures on various topics, including the liberalization of exchange controls, how to balance innovation and regulation, and the central bank's safety net system. Each event provided a knowledge exchange in which our guests heard from subject matter experts and were able to engage with them through insightful presentations, followed by networking opportunities. Tonight is no exception. However, the format will be slightly different and in the form of a panel discussion. You will hear from a very learned panel of professionals on a timely and insightful topic: sustainable growth in a technologically based age. These experts from private, public, and regulatory sectors will provide their perspectives on how we can better leverage technological advancements for long-term growth.
Thank you for that. There's no question that I think that today's topic is certainly very much fitting, given in terms of the transformation that is taking place, particularly within the electronic communication sector, and obviously in terms of how it will impact the various sectors within the economy. And certainly, I'm certainly happy to be in the midst of such an esteemed panel. So I'll just get right into the question in terms of the introductory question. We've seen a number of transformation trends in recent years, including a global pandemic, geopolitical shifts, and increase in the threat of climate change, and technological advancements, which have implications for a small open economy like the Bahamas. How have these developments impacted the growth trajectory of small island states such as the Bahamas? So I would start with Dr. Wright, and I'll go to
Thank
Dr.
you,
Saboin.
Chair. Thank you, Mr. Pinder, and thank you, audience, for inviting me to this really interesting and discourse on this really important topic. If I could just back up a bit and talk about what has been happening not only in the Caribbean but by extension the world. We have seen over the last couple of years there have been significant challenges that have been faced in the world in terms of global shortages, disruptions in supply chains which have really impacted prices. And there has been an overflow to the Caribbean in terms of what we have experienced. Coupled with the fact that where we are in the Caribbean in terms of where we are in the North Atlantic, we're not only exposed to these imported challenges from many of these developing countries, but we face our own situational challenges because of where we are in the North Atlantic. We're prone to climatic shocks from hurricanes, storms, and so forth. The type of economies that we run is narrow in base, dependent upon one or two areas. We have limitations in terms of what we can do with our currency because it's pegged to one of the leading currencies in the world. So therefore, when there are movements in terms of competitiveness or valuation changes in the currency of the United States, they affect the currency here in the Bahamas. So all of these challenges really bring about issues in terms of the ability to really grow the economy and grow the economy in a sustainable way, which is what this panel is discussing tonight. If you look at the growth rate of the Bahamas over the last 10 to 15 years, you're moderating somewhere between 1.5% to 2%. The Caribbean rate is about just over 3%, and that number includes Guyana. And if you take out Guyana because of the discovery of oil and therefore the exceptional growth levels that economy will see, really the Caribbean is running at somewhere at about 1%. So those are really low numbers for such a region. And what is really driving or causing all of this is low levels of labor productivity, low levels of total factor productivity when you're combined with other factors, the ability to really garner private sector credit in order to develop industries. At the same point in time, if you look at the supply side of the equation, you find individuals who are not properly trained, who have not been exposed to many areas in which they could be exposed, where they could expand their levels of productivity, as well as the technology that goes along with that. But let me stick to technology and what technology can do, because that's what we're here talking about tonight. There are 3 points that I'd like to raise in terms of, in my preliminary introduction. Technology obviously can do a lot more in terms of labor supply and labor demand. It can obviously talk about upskilling workers, augment workers' abilities, and at the same point in time, extend that growth rate that you're going to see on the labor supply side. All of that obviously would contribute to high levels of productivity, which will expand in a sustainable way the growth levels. There are obviously some drawback in terms of technology and what will happen. If it is not augmented properly with workers' ability, then there would be some limitations in terms of some sectors of workers who will not benefit from this. There's also obviously other things related to technology that we see happening here in the bank in relation to financial inclusion and financial efficiency, and technology plays a part with that, with the products that are offered, how it is offered, expanding this whole the issue of private sector credit so that more credit is available in the economy, so that businesses, small and medium-sized businesses can actually go to banks, borrow money, and then expand their balance sheet and their growth rates. And obviously the combination of technology in combining not only with other factors of production, labor, capital, and so forth, that is needed in order to find the most efficient way in order to derive that happy medium, that optimum medium in which you have these factors of production really expanding and providing goods and services to individuals. Expanding sections of the economy that are probably high in terms of value. Orange economy that is tied towards tourism, creativity, and the product that this country depends on a lot. All of these things can be done by technology and are being done by technology in other spheres. And all of these things can contribute to that sustainable growth. The same question you asked at the beginning, through technology. So let me pause here so that others could continue.
Dr. Saboin, I don't know that you wish to add anything, but because one of the things I found quite interesting from Dr. Wright's presentation is certainly in terms of the anemic growth, right, in terms of these Caribbean or these small economies. I don't know if you wish to expand on that a bit.
Yes. First of all, thank you, Central Bank, for the invitation. Congratulations once again to all of you for the 50th anniversary. The IDB has been a strong partner for the Bahamas, and we are very happy with these 50 years for this very important institution in the country. So just to try to answer your question, I think, and it was a great introduction of the topic of this discussion by Allan. I think that if we kind of rewind the story, let's say, over the last decade, I think it's important to see the trends now that we have. We have climate change, and immediately we had the pandemic. And that is what actually made that push in terms of the changes that we are seeing in the world and also in the Caribbean, and particularly in the Bahamas. And one thing is that if you see climate change in the region, what we're seeing is an increase in the frequency of these events, right? So give or take, we have a significant event every 2 years for countries like the Bahamas. The last one in the Bahamas was in 2019, and in 2020, immediately, we had the pandemic. And as Allan described, for the nature of the economy of the Bahamas, it was a very important shock. So the growth trend was negatively impacted at that point. But the world responded pretty swiftly to the change. So let's say that the Bahamas got affected more than the average country in the world. And the world responded, let's say, very swiftly in terms of monetary and fiscal policy. So we saw monetary easing for some central bank, fiscal stimuli. But at the same time, we saw that society adapted to a new way, let's say, to an inward way of living. We were working inside of homes. We had supply chain issues. And some sort of that, changed the way we were using that production function, which is sort of a black box in which you put technology, capital, physical capital, human capital, and labor. So to some point, or to some extent, the stimuli that I'm talking about was higher than desired. And that was to some extent expected, right? Because the nature of the shock, of the pandemic shock, was, unprecedented. And when you combine these two things, when you combine this fiscal stimuli and monetary stimuli, and you have a new way of production and exchange, so less demands for some goods and some demands for another goods, and you have more disposable income and you have more savings, what you have is a surge in inflation, right? So rapidly, the world changed this paradigm. So we were in a in a loosening world, of monetary and fiscal policy, and then all of a sudden, because of the surge in inflation, we just got a tightening stance of policies. So an important thing here between those two, let's say, shifts in epochs, was that there was an underlying way to do things was occurring. And let's say that the Bahamas wasn't being benefited by that, or it got that benefit afterwards, because all of the stimuli that came was some sort of in a savings, on the source markets of the Bahamas. And that, when the health situation improved, what we had was, as some economists call it, the revenge spending, and some people, started to get out of their caves, right? But now with the benefit of telework. So some sort of the recovery that we are seeing is in part due to the stimulus and in part due to the new technology. So we need to learn to disentangle these two factors that are happening, and I think that is very important to take into account. So the point is that the trend, which is what we are talking about, so how can we go from 1.5 or 2 to 3 or more, was affected by this trend. So what we see in the Bahamas in 2022, 2023 is that it recovered pretty swiftly, so the recovery was pretty fast. And even in 2023, we see some of that recovery, but in 2024, we are seeing that recovery. So still above pre-pandemic growth rates. And the question is, right now, is how are we going to maintain that growth rate? Or how can we, increase it? And I think the answer to the question is, so let's not look at the tourism sector alone, because with these technologies, I've seen, for instance, in the case of the Ministry of Tourism and other, tourism suppliers in the country, that they, for instance, are using technology to target markets, using artificial intelligence in markets in the other side of the world. So if there is a person in the Middle East, just to say, a different time zone, and they say, okay, so I saw a commercial on the Bahamas and I want to go there, so they can just go to an official website, which is very good, by the way, and they can, get information from the Ministry of Tourism and other agencies. So artificial intelligence is, helping, and digitalization is helping that sector on a different ways. But the question is how these technologies can be adopted, because the key issue here is adoption, and I guess we will talk about that later, of existing sectors with potential, let's say the financial sector, real estate sector, other sectors, and of course within the tourism sector, but how this technology can unleash some sectors that are dormant. And I'm going to stop it there. Thank you.
Thank you for that. Ms. Rolle, certainly in terms of heading the Securities Commission, I want you to speak to the overall investment and regulatory posture. So, for example, there have been a number of considerations or developments. We talk about climate change, and we've also talked about in terms of the technological advancement. So, you do have a choice. You can look at it from the perspective in terms of the technology, et cetera, but certainly in terms of how these considerations impact the overall investment and regulatory posture.
Okay, thank you, Rupert. And first, I'd like to say thanks to the Central Bank for the invitation, and congratulations once again, John, on the 50th anniversary. So I think, Rupert, when you posed the question to Allan, and I can't remember your name, Jose, you also tied in the geopolitical dynamics in that question. And from the point of view of the regulatory space, I think the impacts for the Bahamas are really on come from two different angles. First, it's from the angle of the global standard setters, and some of the changes that we see coming out of global standard setters as a result of what's going on in the world. And then also from the point of view of how technology and what we call fintech is causing regulators to adapt and causing regulators to take a look at the disruption that is going on in the market. And I call it, I don't want to say how regulators are changing, because regulators have a view that regulation is technology neutral, right? And that the truth is that what we're seeing isn't any new principles, it's just a new way of delivery. And so the regulation should be able to adapt to that if those things can't already fit into the framework. So from the point of view, though, of the standard setters, I mean, what you're seeing really, particularly in the anti-money laundering, countering, financing of terrorism space, is adaptation to how fast money is moving around the world, the different modes by which it is moving. And you see regulators having to ensure that its frameworks capture all of these different modes. So that is happening, and certainly in the Bahamas, I think we've adapted well to that. But the space is continuously evolving, right? And then what you see also on the technology side, whether it's digital assets, whether it's a payments platform or something, you see new delivery methods, new ways of doing things that have the potential to disrupt traditional markets. So for example, we talk a lot about the crypto space, and I think crypto could probably be compared to the early days of the internet, whereas the full potential isn't really realized yet. But I think we're on the cusp of beginning to see where it's going, which is the digitization of assets, the digitization of traditional securities. And the implication for that is that ordinary people, and whether they do that amongst themselves or whether they do that with intermediaries involved, they can create ecosystems that go around the capital markets, that go around traditional markets, that go around what we see as the regulatory space to protect investors. So I think what is happening for regulators is we have to sit back and think about who is it that we're trying to protect. We have to now take a step back and look at these questions philosophically, right? In terms of who is it that we're trying to protect? Who is it that are in danger here? Who is it that we need to regulate? And ensuring that the normal principles that have governed our markets for the past 100 years, that they aren't lost in the process. And I'll end that there.
Very good. One of the things I found quite interesting is this whole notion in terms of the technology neutrality, because I think that that's important in terms of to the extent to which you allow the players in the market to be innovative. So really look in terms of a set of principles, et cetera, and not in terms of regulating the technology itself.
Never in terms of trying to regulate the technology itself. That's a losing game.
Yeah.
Right?
But and to allow for the innovation, very good. Yeah. Right? Mr. Rolle, from the NDB, because certainly in terms of the National Development Plan, it's certainly a living document. I think sometimes we tend to look at it as being very, quite static. And we've said a lot in terms of some of the technological advancement, a lot of the developments. You want to put that into context in terms of, particularly in terms of your work with the National Development Plan?
Sure. So the NDP, at least the first and second iteration of the working document, incorporated technology as a way to enhance our economy, our efficiency of living, as well as the ease of doing business, and to reduce the cost. So we look at technology, and I think sometimes we look at it in a silo perspective, when in fact technology, if we even look at it from a climate resilient point of view, we can utilize technology even from monitoring some of these disasters, whether it's through the sensors, it's satellite, whether we use artificial intelligence for proper disaster preparedness. So the use of technology through all these things allow us to first properly prepare, right, as well as mitigate. And so the National Development Plan has that all incorporated in it. It also has incorporated in terms of technology through smart cities, right? Using smart meters, using these various interventions to allow for efficiency, the reduction of costs. And so when you speak of all of these things, it touches on improving the levels of productivity, right? It touches on improving the livelihood and how efficient we are when we're engaged government, when we're engaging or implementing resources. And so there is a goal within the National Development Plan that speaks to the incorporation of technology across the 4 pillars that it has, whether it's with human capital, it's the environment that's built and natural for the economy. And so it's one of those things where it's a matter of embracing technology in the right way. So the Bahamas is not New Providence. So that's the other aspect. How do we engage technology in some of these, some would consider rural areas or unbanked areas. And so these are several ways in which the National Development Plan speaks to technology. Now, I'll also say this. The last working draft of the National Development Plan was done in 2017. Provided that not much has changed, we would need to look then, and certainly technology has changed since then, but we would need to look at how we then moving forward, since that time of that document was done, what is it moving forward to incorporate the level of technology towards the goals that we would like to see?
Quite interesting. And I couldn't stop but wonder, particularly when you look in terms of, let's say, to the extent which Bahamas extends beyond New Providence or Grand Bahama. Yes. And also in terms of the challenges, obviously, in terms of having to duplicate infrastructure across these islands, because, key to delivery of a lot of these products is really in terms of the infrastructure, yes, right, in terms of the technology. So I certainly appreciate that. Dr. Wright, I think earlier in your first response, you alluded to in terms of what I would term to be the anemic growth in terms of these small island economies. And you also linked in terms of digitalization and in terms of perhaps improving growth. I think you also outlined some other considerations as well. But you want to expand a bit more on that in terms of the link between digitalization and also in terms of improving the growth performances, particularly in the context of small open economies.
Well, there are several things we can talk about, as you mentioned that point, Chair. We are obviously aware of what is happening now in terms of digitalization and the expansion of financial inclusion and financial efficiency. All of that is important, whether through central bank digital currency, which we know are a very popular one here, sand dollar, or any other form of fast payment system that can be used in order to include more individuals. And as my fellow commentator mentioned, reaching destinations that are outside of the main geopolitical areas of the economy, and ensuring that these individuals are brought into the financial system, they have access to capital, and at the same point in time, other individuals have access to the capital that they are bringing into the system. All of that is important in really expanding the base. I don't want to be quoting a lot of numbers here, but what thing we're absolutely certain of, private sector credit in the Bahamas and many countries like the Bahamas have been very low. Whether you want to use the word anemic or you're talking at growing at less than 1% on average for the past 10 years or more. And that is something, if these economies are going to really expand and move forward, you have to expand private sector credit. One of the ways to do that is by including more individuals in the system and making it more efficient for them to engage in transaction. Technology can do that. And it's being done by some of the systems that we have here, central bank digital currency through sand dollar, or any forms of other fast payment systems. The other thing that technology will do is also on the labor side, which is also another issue that many economies have a problem. Many economies similar to the Bahamas have a problem with. How do you really augment technology with labor so you get higher levels of productivity? Not replacing labor or workers, but really complementing and enhancing the production that they have. Technology can do that. How do you upskill individuals? Through training and engagement through technology. And we have examples of that, many new examples using artificial intelligence. ChatGPT, you really want to find out something can be done without really going through a lot of information. You ask ChatGPT or any other source, Meta or Google, and you get that information right away. It can help you to really complement the skills levels that are required. And at the same point in time, you carry worker productivity or marginal productivity to a higher level. That is what is needed in order to grow these economies. Now, how do you go about doing that is much harder, harder doing than saying. But efforts have to be made in order to complement technology together, not only on the financial side and so forth. And Christina spoke about the whole issue of proportionality and linking the benefits of technology with protecting individuals in the financial sphere. That has to be done in an efficient way. At the same point in time, you have to set base rules as you engage with technology and the expansion of technology in order to grow financial systems or economic systems. Because you're protecting people and you're protecting individuals' investment. And at the same point in time, you want that investment in the system so that people can have greater access to capital and engagement with all parties within the financial system. Then the third point I'd like to make is that technology can help you really bring all of these factors together to really get the most optimum outcome out of capital that we bring into the system through the financial system, whether through financial inclusion or greater financial efficiency, labor productivity or marginal growth in labor productivity through technology, and at the same point in time, identifying and bringing in capital, as my fellow commentator spoke about, at the same time. Bringing all of these three factors together with technology, then you start to see the expanding contribution of technology. If I could just make one last point before passing on to someone else. Professor Simon Johnson from MIT, he is one of the leading authors on artificial intelligence and what it can do for economies. He spoke about, along with Goldman Sachs, at a conference at Goldman Sachs, where they came to the realization that technology over the next 10 years can actually increase factor productivity by about 1.5% and growth over the next 10 years by somewhere between 7 to 10% globally. Now, those may be smaller numbers in terms of the Bahamas when you break it down, but there is an opportunity there to use it to really combine the right factors in the right way in order to get the optimum result.
Interesting. Well, admittedly, I do have some thoughts, but from the standpoint that we've seen some things in terms of the earlier disposition, in terms of the internet, in terms of what it would have done for growth of some of these economies, and the questions whether we achieved some of those growth rates. But Dr. Saboin, I just want to. We talked a lot about the link between the technology, and Dr. Wright obviously we talked about in terms of overall productivity, this marginal productivity of labor, etc. But one of the things I want to take away from what he's just talked about as well is this private credit expansion and what that would mean in terms of, I don't know if there's any thoughts that you want to share in terms of private sector expansion, in terms of how that can aid growth of some of these small economies.
Thank you. Yes, it's very important to try to look at the role of the private sector. But first of all, I would like to mention the digitalization process as we are kind of seeing it at the IDB. So to have, let's say, like a healthy digitalization process in an economy, you need to have sort of three things working well. On one side, you need to look at the supply side, the internet, the infrastructure, right? Because to use digital technologies, you need to be connected, right? You need to have access to the cloud. You need to have a phone with 5G technology, etc. And then you have you need, the second factor will be a private sector that is willing to adopt, right, technologies and engaged into, take the leap forward, not to innovate. And I would say like the third side of that triangle, if you will call it, is like the regulator, is the government. How a government can foster, right, that environment in terms of supply, to provide access to people and connectivity, and how you can, promote the private sector to get there. So having said that, in terms of the private sector, what would be kind of the key role, to kickstart this process? The main issue is adoption. And I am going to tell you real quick about a research that I did. It's not in the Caribbean region, but in the wider LAC region. So we took a look at, sort of estimated that production function that we have been talking about, and we included the role of ICT capital. And within ICT capital, we are talking about hardware and software, the assets through which the company, can produce whatever they do. And we, of course, noticed that there is an important contribution of that capital to the productivity and the output of those firms through different, we economists try to, to compare different methodologies and use different variables that are similar to each other. We call that robustness. So we did all of that. But we couldn't find any significant relationship, at least in terms of correlation between that asset and productivity growth. But then we carry out some sort of surveys at the IDB, and I think I have to talk to you, Samantha, because we have a new product that we can roll out to small, medium enterprises, which is called Digital Check. So you gather, let's say, representative sample of firms, and then you throw a bunch of questions on how they use digital tools and how are they prepared. And there was a variable that is called digital training. That means how the labor factor, which Allan was commenting, used this technology. And when we interacted, the capital, the ICT capital with the training, we found a statistically significant effect. So the point here is how you get to adoption, how you get to get the people within the firm to use this. And what are the barriers then? So if this is some sort of, what we need to do, so why are firms not doing it? And we sort of identified 3 areas. One area is in terms of factors, accessibility to factors. And one is, as I just said, digital talent. People that can be at the firm and know how to use the digital technologies. That's very simple. But in some immature markets, let's say in terms of the digital product, which is, I would say, a representative country in the wider Latin American Caribbean region, the role of technical assistance is scarce. And there is some sort of a coordination problem. Maybe, Samantha, you have seen it with this market, especially with SMEs, because if the market is immature, there is some sort of lack of demand, right? On the company side, because they don't know, how can which technology would I use? But also on the supply side, me as a provider, maybe I have a skill, but maybe if there is no demand, so there could be like a coordination problem that might be solved by an authority, the government, civil society, etc. So there is the digital talent, there is access to technical assistance, and it's the role of financing, because there might be a project, a technology that you are interested in adopting. But then if you don't have access of funds within the firm to finance the acquisition of that technology, and there is difficult for the banks to finance it, then it's very difficult for you to adopt that technology. Another thing is the adequacy of the service, because the firms are heterogeneous, in all countries, in all economies. And then for a provider, it will be very difficult, for a specific company to design and implement that sort of service. So those are in the factors, in the factor market. And then there are things that happen within the firm, of course, within their environment, and these are related to the absorption, the level of absorption. And the level of absorption is a concept that I mean, it moves around. How is the firm prepared, to adopt any technology? And there are two things related to that adoption, or absorption, sorry. One is management, because suppose that you have the digital talent, but you need managers, skilled managers, that they know how to allocate that talent, and how are you shuffling processes, whether in the finance aspect of the firm, whether in the organizational aspect of the firm, and in the operational part of the firm. So how you as a manager can do that. And I think that is really important. And then we come to like a third part, which is the market in which the firm operates. And one key element of the market is competition. And if you have more competition, I mean, this is a competitive market, you start seeing, so that firm is doing it, the other firm is doing it, that firm is doing it, they're gaining market share, so I'm going to adopt it. But if the market is not as competitive, it's going to be difficult, to get that adoption going on, right? And last but not least is regulation, whether there are tariffs or taxes or red tape, costs that makes difficult, to adopt that technology. Or, for instance, let's say bring a foreign expert that can help you to carry out that technology. We see that it's very difficult. So these are some of the factors that I think are very important when we look into the process. No?
Interesting. Yeah, one of the things that you mentioned in terms of the overall adoption, I guess, has always been, a point for me, and that is really to the extent in terms of the social and cultural norms, in terms of how that impacts in terms of the overall adoption. But you raised a very interesting point, which I think segues quite nicely into our next question, and has to do in terms of the regulatory space. And as you can appreciate, in terms of irrespective of the sector, there are always bad actors. And while you want to incentivize the market players, right, there obviously has to be the rules of engagement. It's almost equivalent to that of a referee, eh? And a game that is well played, you don't see the referee, but the referee is there to ensure that the players, are adhering to the rules. So what are some of those considerations to ensure that you can obtain in terms of the kind of market efficiencies and at the same time addressing the bad actors, so to speak?
So, Rupert, by saying, by framing this by saying you don't see the referee, you just told me a lot about how liberal you are and the leaning of your economic stance, right? So what I do, Rupert, is I take you through really thinking about the development of the Digital Assets and Registered Exchanges Act, and hopefully we could talk through some of the points in your question. And I guess what you're really getting at is how do we as regulators, one, create an environment where innovation can take place, but yet at the same time not over-regulate to the point that we stifle innovation, and we still have enough of a framework that we can address bad actors, right? So that's a tall ask for regulators. But I think overall in the Bahamas, I think we tend to strike that balance very well, and I think we've always had to, because the market that we're really playing in as financial regulators is really an international market. We're an international financial center. And outside of the central bank, probably the Insurance Commission, the majority of what the Securities Commission regulates is really in the international space where we regulate intermediaries that perform in the international space. So we've always had to be very conscious of that balance between enabling business to grow and always and keeping out bad actors, because the reality is, while regulators don't want to say it out loud, it's important for the jurisdiction to remain competitive, right? And so if I take the Digital Assets and Registered Exchanges Act as an example, when we look at crypto and crypto activity. Really, there's no domestic market for crypto in the Bahamas, despite what you hear out there. I mean, the activity in the domestic market is negligible, right? And so the issue would be, well, then why would the Bahamas develop regulation for this space if the activity is negligible? What is important about it? So the problem comes in because of the fact that we are an international financial center, and there's always the possibility that as an international financial center, one of our licensees may start engaging in this activity. A new licensee may come in and they want to engage in this activity. And so it's important to have a framework in place that can address the activity that may take place within the jurisdiction. I mean, there are other alternatives. You can ban the activity outright, or you can create a hybrid scenario like a sandbox. But if you ban the activity outright, that doesn't quite align with the products and offerings in an international financial center. So for an international financial center, that's probably never an option to ban something outright. And so, and then the hybrid scenario with a sandbox, that scenario doesn't work where there isn't a domestic market, because you can't really have oversight of activity that is not really in your jurisdiction. You can't really look at what's going on. You can't really see very clearly what is happening with the development of those products that may be for another market. And then there are all sorts of other issues that could come in place with a sandbox. And so the only scenario that you have really is to develop a framework that can address the activity that may come into the jurisdiction. And some of the challenges that we had specifically with digital assets, and some of the challenges specifically with crypto, as you know, regulators around the world are still struggling with it. And you'd see, for example, in our neighbors, the United States, there really isn't any clear framework. They're still trying to make sure that to see whether crypto can fit within a securities framework. And all of that is fine until it isn't, right? Until the US SEC lose one big case, and then it all falls apart, and then there's nothing, and then there's a problem. The Bahamas didn't have that luxury, and so what we set out to do is we developed first a legal taxonomy, right? So we developed a legal taxonomy within which crypto could fit. And that ensures that we capture their activity no matter what it is, right? We don't have to guess whether it's a security. We don't have to guess whether it's some consumer asset. It is what it is because it's defined within its own legislative framework. And so that is the cornerstone of the framework, creating that taxonomy. And then the next thing is really creating a flexibility where the regulator can take action, particularly when something goes wrong, right? And I know that there's been a lot of noise in the market about FTX. The truth about FTX is that of the 19 jurisdictions within which FTX was regulated, the Bahamas was the first to act because we had the ability to do it, because we had the legislative framework to do it, right? And that's the truth about it. And so you want to have that framework where you can enforce if something goes wrong, but then you want to have the flexibility so that innovation can take place. And going back again to DARE, we knew in 2018, 2019, when we were developing DARE, crypto was changing every 6 months. The ideas we started with in 2018, it was completely different by the time as the act passed in 2020. It was the whole landscape looked different. And so we had to have enough flexibility in there that we can capture things that we need to capture without even knowing what could be on the horizon in another 6 months. And the only way you can do that is by being principles-based, right? You know that, look, certain risks look a certain way, and so this is what we know what to do in those kinds of circumstances.
Interesting. Dr. Saboin, I mean, I want to come to this question since the role of the multilateral agencies, right? Particularly in terms of stepping in the gap between the private and the public agencies in terms of this digital transformation. So I'd like to hear your thoughts on that. And if you can, maybe share your thoughts in terms of the role of public infrastructure in all of this, in terms of, the delivering, in terms of ICTs, et cetera.
Yes, thank you very much. And let me start by telling you what the IDB has been doing on that space, particularly on the public sector, sorry. So we have one program which is called Government for Competitiveness. And through that program, we were able to support the government to launch the My Gateway portal, which I have to look because I want to be fair to my IDB colleagues and the government, which was they were very hard on this. We launched over 45 government services online to increase access to different types of deals that you had to do as a citizen, And the program also trained over 500 public servants. So here we go. We have, more productivity. By the way, we ease, all of this stuff that the people has to do. We also trained 500 public services. We simplified over 70 government procedures online. We operationalized 150 web services from 10 entities using the platform, and we prepare legal instruments that support a digital service, apparatus with that program. So on that front, we are kind of bridging the gap, because if we would like the private sector, to thrive and to adopt, we also need, of course, the public sector, to smooth things out. We also are doing the public financial management program, and on that front, we kind of help lay the framework to have a National Statistics Institute. And why I'm talking about that? I'm talking about that because if you would like to use digital tools, and if you would like to do artificial intelligence, and if you want to use new technology to policy decision making, you need to give the National Statistics Institute a framework, to operate. With that program, we also finance the e-procurement system, and that's something that smooths, all of the transactions that the government is doing with private sector companies, particularly, of course, Bahamian companies. And we are also doing something very important in terms of efficiency of the government, which is use of the Oracle system, which is the digitization of the payroll. And that's something that we carried out in other countries and, have, translated into significant savings. So what were we planning to do, moving forward? Because this is what we are doing and what we have done. We would like to, of course, work closely with SBDC and with the small business community, and of course with all the private sector, particularly through our IDB Invest arm, which is our private sector arm, but also to the IDB group in general, to try to get this adoption that I am talking about, happening. No? And in the public sector, to do something to try to leverage these technologies, because what we've seen is that in order to bring competitiveness to the private sector, is that it's not that there is a lack of data in the Caribbean region and in the Bahamas. It is that there is data, but that data are not talking to each other, right? And to some sort of coordination mechanism to all the different agencies that gather data, we can actually provide, relevant information. And let me give you an example real quick on a project that we did in a country in the region. So we went there and digitized all of the student records, children graduating from high school. And we also went to the university and we took a look at what are the careers, the demands, no? So we sort of gathered two databases, and we said, so here are how the students good at, some are good at math, some are good at, history, some, like any society, like any children. And these are the careers that the government or that the university or the universities are offering. And we used that information to advise the government, and the government took the decision, okay, so let's say we are going to foster tourism. And the government took the decision to bring some teachers to, enhance the tourism career in that country. So this is just an example on how we can support the government leveraging data to try to smooth things out for the private sector. And then you can ask the private sector here in the Bahamas and say, so what were our students from UB, what are they doing? Where are they graduating from? What are they doing when they come to high school? And then, so to match labor needs in terms of the firm with what the country is producing. And that's something that we would like to, to develop further.
Okay. Interesting. Ms. Rolle, right? And we've talked a lot about in terms of, we've also alluded in terms of this digital transformation. And the government, I think, over the past decade has talked about in terms of digital transformation, how we can look at digital transformation in terms of improving overall efficiency, reducing revenue leakages, etc. From a National Development Plan perspective, can you outline in terms of some of the work that you've done in that area in terms of digital transformation? I know you alluded to some of those considerations earlier, but can you expand on that?
Yeah, so I know we've already started to work on a few things. And when I say we, I mean, us, the government is us. let me be corrected. So from the NDP standpoint, I would have mentioned a few outlines and goals that were incorporated in there. And we see where there are some portion or element of those things being implemented. But, let's take a step back here. So Jose mentioned quite a few things that can be very helpful. The key thing is to have a plan, though, right? The National Development Plan, the also key word is adoption. It has not been adopted. So I think before we measure what has been done in a plan that hasn't been adopted, we should first take a look at what it is that we need to incorporate in that plan. And so the approaches, the interventions from multilaterals such as the IDB, the regulatory frameworks that we need to look at, and how it impacts our labor, we have that all outlined in that plan that is adopted. To answer your question specifically, so smart cities, I know there's been talk about smart city, particularly using the downtown space, downtown Nassau space and parameters. And so there are a few technology being incorporated within that space. CCTV cameras, the smart grids, etc. Again, they're only incorporated to a certain degree. They're not being fully utilized. We're still manual in so many cases. So if we talk about the water issues that we've been having, we literally perhaps use manual processes to give an indicator as to what's happening at particular water sources spaces. So a human being has to be there in order for you to know that the water generator has shut off, as opposed to incorporating technology where a message or a signal or something goes to your phone and there's something wrong with your system, right? And so we haven't advanced to the point where we can speak to, yes, you mentioned My Gateway, but if I was to ask the audience, show of hand of who utilizes My Gateway. Okay, that's more than I expected. But it goes back to adoption, right? It goes back to adoption. But I think, the NDP, the National Development Plan, outlined quite a bit of things in terms of technology, in terms of using it for sustainability. And it goes across, whether it is from the economy standpoint, whether it is climate resilient or the environment to be specific, or it's also education. So that's the other aspect of that. How are we incorporating education in our systems? Smart tablets, in our classrooms, the way that we incorporate technology in our curriculum. Those types of interventions still are pending. And so we've made some advances. I mean, you can use My Gateway to get your driver's license renewal and a few other things. But we still don't necessarily have that one window, single source, right, to look up everything where the data from various entities are interacting with each other. So I can look up everything having to do with Rupert Pinder as opposed to individually going to the source. So there have been some advances, but in my opinion, not sufficient.
And I think you've encompassed in there not only in terms of where things are, but also in terms of the challenges, which would have been the second part of that question. But I think there's a question I think is fitting for each member of the panel, and that has to do in terms of overall resiliency, right? So we talked about, for example, in terms of the use of technology, in terms of how it can be used to facilitate growth. And we talked a lot about in terms of what I would come back to the same point in terms of dynamic growth within these small island economies. But of course, we live in a hurricane belt, and we are very susceptible to these external shocks, and more specifically in terms of natural disasters. And the natural disasters, obviously, and of course the data is there, and I'm sure that the panel, I'm sure, is quite aware in terms of the kind of setbacks in terms of when you have the destruction to your infrastructure in terms of how far that sets you back. And so while we can talk about technology in terms of how it can be used to facilitate growth, the question is how can it be used in terms of bolstering resiliency to mitigate in terms of some sort of these adverse impacts, particularly in terms of climate change and more specifically, the threat of hurricanes. So I'll start with you, Dr. Wright, and I will invite each of the panel to respond to that question.
And you're right, Chair. This is $5 billion of damages over the last decade in terms of hurricane damage in the Bahamas. You're talking about a $13 billion domestic economy. So if you put $5 billion, even over 10 years, it's a significant amount of damage. So how does technology? Technology can be used a number of ways in order to build resilience. One of the ways I would think is probably even starting with forecasting the frequency and the cost of these climatic events occurring upon the island. Technology can be used in that way. Once you have that, an accurate or a very usable analysis of the frequency and the cost that is involved in terms of impending activities, then it can now downplay in terms of supplementing insurance costs, insurance premiums, insurance coverage, and so forth. Because that is what is going to protect the environment. That is what's going to protect individuals, private homes, businesses, and so forth, and allow them to use reinsurance and other insurance money in order to recover after climatic impact. Technology obviously can also be used in order to help with the understanding of all of the resilience factors that need to go in terms of coastline protection, location of buildings in relation to coastline. If you look at the city, a lot of the buildings the major buildings, financial sectors are almost on the coastline. So how can you look at the use of technology to say, where can we be from a storm surge without having significant damage to property, lives, as well as other resources? And how much will it cost if there are there? And what is the recovery cost? And what is required in terms of reinsurance and insurance in order to help that recovery? Because obviously the government is unable in all cases to bear that cost on their own. So some has to be borne by the private sector. So technology really has to go in hand with all of those factors. It has to also go hand in hand in terms of the development of coastline protections, in terms of reefs, the development of mangroves and so forth, and how these these different factors will help in terms of retarding storm surges and so forth. So technology can be used in many different ways. It can even be helped in terms, they talk about resilience. When we drive through the city, we see a number of individuals who are walking, who are coming off ships and so forth here. And that is also, someone will say that, that over time will really downgrade the environment and the factors that we have within the city. Technology can be used in order to forecast what are the number of persons who are coming on ships and the resources that will be required in order to satisfy that demand over different periods of the peak period, like years and so forth, and the months. And by doing that, you really prepare yourself much better in order to deal with these surges, not in terms of climatic surges, but human surges that may come upon the resources that you want here. All of that is available. You can see the ships that are coming here, what is the load on the ships, and how many persons, if you look at probabilities, how many persons will generally come off into your city, and how many persons will be throughout the city during the peak period of maybe between 9 and 12 and up to lunchtime and so forth, and how you can satisfy the demand of these individuals. Most of the time, if you go like between 11 to 1 o'clock, if you drive past Arwa Key and by the beach there at Jonkona Beach, there's a vast number of persons who are in that vicinity. But if you can use technology in order to plan that better, then you can use better use of your resources. So all of that will actually maintain your existing infrastructure. That will allow you to be able to replenish your infrastructure if there is a, God forbid, a significant climatic damage, and at the same point in time, allow you to better cater to these individuals over the period that they are coming here. So it has to be used in an appropriate way. We spoke about, everyone here spoke about augmenting the resources and the factors we have with technology in the right way. These are some of the factors that are being used worldwide, and we have to use them in the Bahamas and the Caribbean in order to protect our environment. Because as I come back to the point, $5 billion damage in 10 years is a lot of money for these countries.
Christina, if you want to speak at it from
Okay, so I think Allan was very eloquent. What he neglected to address, though, is how we pay for it, right? And so as a capital markets regulator, I think what I'll try to address is how we pay for it, right? And so I'll actually steal something the Prime Minister has been saying in the public for months, probably the past year or so, and he's been talking about the impact of climate change on small island developing states like the Bahamas. And he's been making a statement that he thinks larger polluting countries should pay for it. And that sounds, like a very, I guess, rogue, probably a rebel type statement. But the truth is, he has a strong basis for what he's saying. And I think it begins, one, with the Kyoto Protocol, and then, of course, the Paris Agreement, and then we go into the UN statement on how countries can use proceeds from carbon credits to assist with their resilience and their sustainable development goals, right? And how they can use the proceeds from carbon credits to pay for those sustainable development goals would speak to the issue of resilience that you're concerned about. And so I think the Bahamas has a unique opportunity, and I see some work going on in the space with the mapping of our seabed. I think the Bahamas has a very, very unique opportunity to develop what I would say is a very robust voluntary carbon market. Unlike anything that has yet to be created using blue carbon credits. I think, though, the challenge for the government is to build a framework, a regulatory framework for that carbon market, that it can obtain the legitimacy that so far voluntary carbon markets have lacked. And I think we have a unique opportunity to do that, and I think that is a really that could represent a very viable solution for how the Bahamas pays for all of the technology it needs for its sustainable development.
Okay, so I think that we need to see climate change and resilient to climate change. It's like some sort of a two-way street. No, one street goes that, of course, increasing, greenhouse gases and, global warming and all of the effects that is having in the environment, of course, creates damage. And in countries like the Bahamas, it affects, when there is a big event, it affects, of course, the lives and livelihoods of the people, but, it affects the economy. So the economy contracts, there is more fiscal spending, et cetera, et cetera. And you don't want that to happen. But there is the other street, and I'm gonna go back to the first part. But the second part is digital adoption can mitigate climate change and actually improve things, right? Or at least not get it worse. Because if we don't take action to climate change, and going back to the countries, the ones that who should pay for it. So digital adoption can help the energy sector worldwide become more efficient, can help the materials sector, which is a highly, polluting sector, work with more efficiency, and can also help the mobility sector to work more efficiently, to metering smart, these smart cars that we are seeing, more efficient in fuel consumption, more now they're almost electrical, etc. So on that front, that helps the Bahamas in the sense that the climate space is not getting worse. And if it's done properly, and if the advancements are great, it can improve. But that's on the global stage, that's like 10,000 feet above. So if we go back to the other street, and I want to talk about that, that some sort of climate cycle in terms of, on a macroeconomic sense, I go back to the beginning, so how these technologies can help other sectors weather the storm. Think of it as, if you have two jobs, let's go to micro. So if one job is not doing well, or let's see a family, a family that the father, let's say, works in the tourism industry and the mother works in another industry, let's say financial sector, manufacturing, whatever. So when you're affected by the effects of the natural disaster, so the other part of the household has some sort of income. So that's the same analogy applies to the economy, right? So if you can propel other sectors that can, compensate what is happening with the other sectors, so you are also building resiliency, right? And you also have the public sector. So if the public sector is able, to use, as I said, data, the wealth of data that is there, and is able to, to digitize it and to, to make it work for each other, what my colleagues in the disaster risk management, space call preparedness, recovery, and reconstruction. So you can be more prepared if you have more data. You with the assessments of the costs on what's been going on how you can, assess how different sectors of the society or government sectors are affected when an event happens. You can be more prepared with technology. But then you can respond more quickly, right? And then the recovery can be, carried out more rapidly. So this is how I think, adoption is very key. At a global level, at a very high level in terms of, of the planet, that we are a member of, but also within the country, in the Bahamas for the private sector, and also the role the public sector can, use, like, let's say, to lubricate this resilience. And of course, I have to say it, the IDB is here to help the Bahamas fulfill those goals. Thank you very much.
I think for the resilience aspect, It is important to utilize technology, yes, for the preparedness. So we look at rising sea levels. We already know that our landmass is receding, right? Over the next 20 years, the Bahamas may be underwater. Well, probably not 20 years, but 100 years, more like it? Okay. So if that is the assumption, then even utilizing technology to see where there are the most increased flooding areas. And so we use technology to figure out the proper mapping and planning of housing communities, right? What type of housing structures should we have? From a disaster preparedness, we're in the belt, so it will occur. So using technology to then construct the appropriate structures where, if you need to then leave your home, right? And so you have those areas to where they're the safe places for persons to go. And I don't think we have sufficient number of those things. And are they equipped to manage the population when it comes to that space? I think the other part of the technology then is the education part. And I think we can incorporate more technology use to educate. And I think that helps with the adoption issue that we have. So how do we then utilize the technology to educate our populace about the climate change issues? Because I think for some of us, it is this high level discussion happening around the world, and we're just tagging along, as opposed to we are the most vulnerable. And so we should be more involved, more aware, more educated about it. And so those are just some of the key things that I would say, utilizing technology, but then also making sure. The final thing that I would say is, we know we're in this space and we're impacted by it. Then the other thing is, how do we then ensure that we have the proper expertise? So increasing, green jobs or jobs within the green space, and making sure that we become the experts of how it is that we transition from, the use of fossil fuel to more sustainable energy, alternative energy sources, and those types of sustainable jobs and career paths that can assist us in maintaining, our resilience. So those would be some of the key points that I would highlight.
Thank you for that. There's just a few final questions here. But one of the questions and I think, Dr. Saboin, I think you had alluded to it. We've talked a lot about in terms of, the digital transformation and how that impacts growth, et cetera, and we've accepted that. But of course, even in terms of my own preliminary research, you look at, for example, the gains in the developed countries, more specifically the OECD countries, and you compare that to some of the developing countries. I think there was a case study, involving the OECD versus that of India, right? And obviously, the gains are disproportionate, right? So the question is that for small, open economies like ours, within the Caribbean, and I think you would have alluded to some of the considerations earlier. I think you talked about, for example, the absorption or the adoption, et cetera, and so on and so forth. But can you consolidate in terms of and identify those constraints for us that would adversely impact, the benefits that we get from this digital transformation? We can identify those constraints, more specifically in the context of small open economies.
Well, an issue that has been touched superficially in this discussion, but I think it's important and it's not intention, is the role of connectivity and the family island, the archipelago nature of the Bahamas. And to get there, the role of the supply, of having access to internet, and that you can actually have a service that is reliable, right? I think that will be very important at that level, no? And one could say, because it's difficult. I mean, some people, but it shouldn't be difficult. But I think were you, Samantha, or someone, bringing infrastructure to the family islands is costly, and there is less people there. So the per capita return of that investment is high. I mean, the social is different, but I mean, in terms of the return is very difficult. But in terms of the specific of providing, internet, I think that technology is some sort of cheap, and phones are becoming are cheaper. And I think that will give, to on the supply side, to small developing states, and particularly archipelagic nations like the Bahamas, a boost, Because GDP is not only estimated so GDP occurs in the whole country, From here to, And other issues are, I think I touch upon them, but I think critical, it's the role of education. To provide training, on-the-job training, facilitation, because sometimes, that's why I mentioned this tool, because this tool that we use, this survey, informs the firm at which level are you in terms of digital expertise. So you can carry out the survey as you evolve, and you learn from it. It's like an experimental tool that you can have. So it's like you start with rookie, and then you end with advanced or expert. And that way, you some sort of learn. It's like a self-evaluation tool. And if we are able, to provide some sort of tool to the businesses, to the small businesses in the Bahamas, I think it will be a good way to get the adoption rolling, because then, and it has to come from all parts of the firm. It has to come from the managers. It has to come from, from the staff, from the technical, from the financial, from the ops. But it also has to come from the customers, because we sometimes we own a firm, but we also buy products from other firms. So I think that the role of adoption and education, it's going to be key for the country at that segment. And to larger companies, I think that's another level. And the financial sector it's a sector, complicated sector on its own. It's easier for them, to perhaps adopt these technologies and to increase financing through these technologies. So when you combine all of these things, if people have access, they have training, they have resources. So we go back to the production function. We ended up with a production function, So you can increase output. So if you want me to summarize like three, I will say those three are quintessential for small developing nations, which are also archipelagic, like the Bahamas.
Ms. Rolle, I would also like for you to chime in, because I think you alluded to one of the points that he had raised as well, and that was the issue in terms of funding or financing, right? You want to provide some thoughts in terms of what you would be considered in terms of some of those constraints? Some of the constraints on? In terms of the overall adoption, in terms of this digital transformation.
Yeah, so I think Allan started off talking about credit being anemic, and the anemic credit growth in the Bahamas. I think the fact that you have this anemia in the credit market, coupled with an underdeveloped capital markets in the Bahamas, underdeveloped domestic market, I think that that combination really is probably the most significant constraint on growth, because the bottom line issue is really where are small businesses going for funding, and if small businesses are driving the technology and driving the innovation, if they are to drive it, then they have to have a funding source. And if there's limitations in the credit market, underdevelopment in the domestic capital markets, then really you have entrepreneurs who are under pressure and really have limited sources for funding. And I think that's the biggest issue.
Interesting. So as we wrap up, I'll start with you. In 30 seconds, can you give any closing thoughts in terms of how you see, in terms of this overall digital transformation and growth and economic growth? Any closing thoughts?
So, 30 seconds. Okay. Digital transformation, I think it starts with that overarching plan, right? I think we look at, people, and the education it needs, the adoption that's needed, but then we look at the landscape of what it is that we're trying to achieve from a digital transformation standpoint. Technology is forever changing. And so from a national development plan, from any planning perspective, you have to be agile enough. And however, you still have to be forward-looking enough to adjust to technology and the implementation of technology. My final point with that, I would say, is we still have a bit of work to do in terms of digital transformation, incorporating new processes in the way that we do to increase efficiency from a government public standpoint, but then also from a private standpoint, because quite a bit of small businesses, believe it or not, don't use certain technologies in their businesses to enhance efficiency. And so I think we need to take a more wider scope of education when it comes to digital transformation so that people become more comfortable with it, that they understand it, that they don't fear it. And so those would be my points.
Well, I just want to piggyback on that in terms of the National Development Plan, which, by the way, we had a very great event with the whole National Development Plan, and people were really involved. But the plan sets the vision, and I think you have to implement it. IDB, we will love to support that implementation. But monitoring is also very important to get into that vision. Monitoring and evaluation. And I think there is a huge opportunity in terms of the data generation and in terms of the way that that data can be digitized and used, to get there, to get to that digital adoption, to get to those levels of productivity and that vision that you would like to have there. I think there is a huge opportunity there. And I just want to end by saying that I am optimistic on the role of digitalization, perhaps not so optimistic as of now with artificial intelligence, but digitalization, I think, has given a boost to the world economy and to all countries. And I think the Bahamas will benefit from it at different levels, and in the main industry, which is tourism, but in other industries, I think there's scope. And I think the government and society in general, because what the government is doing, it comes from a demand from the society in trying to bridge these gaps. I totally agree that we need to, to kind of consolidate a digitalization strategy for the country. But I am super optimistic, and I am also super optimistic of the role that institutions like the central bank can have in providing technical support and vision and data and advisory. So the bottom line is that the future is ours, I will say.
So Rupert, I was thinking through really what you were asking, and it brought me back to about maybe 10 or 15 years ago. I often lamented that the Bahamas found itself struggling in what was then known as the information age, without having gone through an industrial revolution, without having gone through a cultural revolution. And so we were there in this information age struggling, right? I think what the impact of AI, digitalization, what that now has the potential to do is to erase that, the importance of having gone through that evolution, and to catapult countries in ways that it can put them on the same footing as an industrialized country. Because what happens now in this new age we're in is that the world is your marketplace. An entrepreneur who is sitting in the Bahamas doesn't have a population of 400 and some thousand to market to anymore. They have the whole world to market to. So the world is your marketplace. The world is your customers. And so we have the ability now to deliver products and services to the entire world, and to erase any deficiencies we had because of any evolutionary points that we missed out on. We have the opportunity to erase that, and I think a country of like the Bahamas, we need to seize those opportunities because the competition will be fierce.
Well, I have the final point. I look at the example of countries like Estonia and Israel, very small countries, very similar in nature to the Bahamas. Several years ago, struggled in terms of this digitalization adoption, getting it through their systems, cooperating in terms of public-private partnership, and ensuring that it comes into their processes in order to grow their economies. If you look at Estonia now, which is obviously a country in the Baltic, it is one of the most digitalized economies in the world and one of the fastest growing economies in the world. And that was done virtually overnight. So there's a lot of opportunities here for Bahamians to do the same thing. This is a transformation that can happen almost exponentially and very quickly if the coordination is done properly through the use of government agencies, private sector agencies, and having skilled institutions like the central bank and other institutions in order to guide all of that, then this transformation can happen. If you visit Estonia now, there's actually everything that is being done is done through a digitalization process. If you're, I think only voting and getting married are two of the only processes that you have to go and actually turn up in an office in order to execute. I have to double check that, but I believe those are the only two processes that are not completely digitalized. But you can stay from home and do registration on your car, license a business. All of that is important for ease of doing business. And we have spoken for the past 90 minutes about the importance of really ease of doing business, bringing credit into the system, expanding the economy, making it transformational in terms of persons getting into the supply chain and the demand chain and getting closer to your customers, not only here but also right across the world. But all of that can be done very quickly overnight. And you can follow the example of many of these countries who have done it and have come from a situation that were further behind the Bahamians.
Thank you for that. And with that, I think we end a very productive session here today. I think the exchanges, were quite good. And I think the panel deserves a round of applause. And I would like to thank the Central Bank for the invitation. Thank you.
Good evening again. I want to first say a very warm welcome to our governor of the Central Bank, Mr. John Rolle, and in addition for the organizers who were able to put together this team of panelists from the Central Bank, the Securities Commission, the IDB, and the NDP, and our very capable moderator, Mr. Rupert Pinder. So I want to thank you all, the audience here in person, and those who are watching online. We want to thank you. Please, as we move for refreshments, please engage these group of experts, pin their mind, ask them questions, network. This is the opportunity where we have these experts in-house. Please benefit from the knowledge that they have to share. We thank you all for the knowledge that you have shared with us on this technology, the development, the enhancements, and the progress that we still can look forward to. So once again, audience, if you give them a round of applause and we can move to refresh.